Hey folks, welcome to the live stream. Today we're going to talk about Bitcoin. More specifically, some relatively bearish effects I have seen on Bitcoin today and over the prior week. We're going to talk about the pivots which actually caused this move to happen. And we also are going to talk about why I have tethered out of Bitcoin. Okay? Very much recommend you do the same today. Just give me a second to open up the live stream video so I can look at your comments for this stream. There we are. We got Kai and Zexam. Alrighty. So first of all, earlier this week we identified the two pivots, or rather the two most important bands for us at this time, and that was the 60 and the 80. Now, I am just going to use the adaptive MA because it will reflect the data more accurately since it's not a rounded number like 280 is. So, over the prior week, we have seen this get perfectly supported by the pivot of the 1.25 standard deviation of the longest overexpanded period. As soon as we returned inside this band, our price target was the 280 moving average. And that is exactly what we have reverted to. On the nose. In fact, if we actually zoom into this picture, we see something rather interesting. We wick down to test this value 3 times. 1, 2, 3. Directly on the moving average of mean reversion. So, guess what happens when you break that pivot? Looks pretty obvious to me. We see a mass level of panic selling. Now, we also saw this on the prior pivot for mean reversion up here, right? Since if this pivot is crossed, we revert down to that moving average. And it looks like we pounced on that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 candles came in contact with this pivot. Guys, tell me that this is not used by institutions. Just try. We wicked, and I have not manually generated this blue line here. This was generated automatically by the strategy I use. Okay, I didn't draw that line in. It's there because of the program my programmer has written. Okay, so when you actually do break it at this candle right here, this should have been your opportunity to exit all of your long positions. Prior this week, I did recommend tethering out half of your remaining value, right? Or half of your portfolio to tether. And that was the right decision because we continued in our downward trend. And guess what happened? We had a new bout of overexpansion all the way up to the 60 period. Guess what happens when the 60 period is overexpanded? Well, we load up the 60 band. Guess what happens when we return inside the 60 band? Price trades laterally as defined by the 60 band and reverts to the 60 moving average. When I woke up this morning, I was very concerned for Bitcoin and was ready to cash out of a lot of my positions. Right? I actually managed to get out a little bit late since I prefer manual stops instead of automatic. And I did take a hit today in my portfolio because I was still in long positions as long as we were above this moving average. But guess what happens when we return inside the 60 band? Price reverts to the 60 mean. 1, 2, 3, 4, 5 times it touches that mean. And as we got compressed between these two pivots, well, the break was down. And since the break is down and we now have new downward expansion for our longest overexpanded period on the short term, we can expect downward trending to our previous institutional benchmark, the weekly 200 moving average. So I am predicting us that the dead cat bounce is fit. Look at this, guys. We even got rejected on the pivot like I predicted earlier this week. It's not the same pivot, but again, because the midterm distributions on the weekly time frame are expanding to the downside, we expect them to provide rejection. And that's exactly what happened. So now we trend down to the weekly 200 moving average before we compress laterally, okay? And while we're compressing laterally, let's check out the daily distribution here. Since we don't necessarily need to go directly to the mean, there's a really important bit of information here. Let's load up another moving average. Let's just have the weekly here. Excuse me. I'm still sick. 1400. Okay. So with a 1400 moving average on the daily chart, that's just the weekly 200. Okay. So now we run up, we test. It was liable for us to go all the way up here to the 5,000 mark, right? Because that's where the longest overexpanded period was. But now, well, guess what happened? The containing band is sufficiently low enough for us to trade laterally as defined by the band. And all that means is we're going to get lateral mean reversion instead of trending mean reversion. And that's fine, right? It's still predictable. But I am tethered out of this position at this time because we are no longer technically reverting to the mean in a trending fashion. I'm going to check in the comments now. Hey, folks. Okay. I see XRP as a comment. I'm going to look at that. Let's get a few more in today. And I'm just going to keep this a short live stream. Well, why? Because I'm tethered out, and I don't intend to take any positions today. So, take the day off, my friends. Or, I guess we could talk about the proper way to enter a short entry. Okay, let's do it. Proper way to enter a short entry. Well, we have a new downward expansion, so you could just wait for a 14-period CCI roll down on the 4-hour and 1-hour charts. That should be pretty effective. Okay? I really don't want to trade this trend, since I am just predicting lateral moves here. Okay? Remember, our initial signal to get out was here, 50%, and then our full signal to exit was here. And now, I'm just completely bearish. There is no hope, my friends. Not until we're back on the weekly 200. Okay. XRP. You want to hedge using XRP? Did I hear that correctly? Let's talk about why that's a bad idea. $450 was this one, right? So first, let's check that mean reversion. Yeah, no, this is not a good idea, my friends. Right? If we were going to bounce, we would have done it here. I exited my long position as soon as we broke this pivot right here at around 9,750. That's actually when I transferred over into a different long position, poly actually. And that didn't play out because I didn't take profit on the 8% pump. But yeah, I actually exited my position here. And now we're having a downward expansion, right? And since we're having continuous downward expansion, this is actually really pretty, right? Since if we were going to continue our upward trend, there was actually two reasons it might have happened. One, as long as we're above the 450 band, it implies continuous sustainable upward trending there. And then this pink line, well, that's the short-term mean version of this bloom. So it was actually a good confluence of supports. And when that was broken, I actually exited my longs because now we need to revert down to 9,300 before we can actually resume an upward trend. Okay? Back to the comments. I would not be in this, my friends. Could I give my thoughts on the stock market? Yep. On December 16th, I predicted that the NASDAQ composite was entering a long-term crash pattern. You can go ahead and check the video on my YouTube channel. The video is called Bitcoin's Downtrend is Running on Fumes. It's 9 minutes in the video. Okay? Actually, why not? Let's go find it. I'll give you my thoughts on the stock market. Hold on. There it is. Ah, my second video. Yeah. All right, on this video, we actually called the reversal on Bitcoin.
Yes, I did start a short while ago, but I didn't...
So, right here, we were... Oh, this is AST. 1 second.
Have the screen loaded, so you couldn't see what I was doing. Yeah, very proud of myself. Welcome back.
I'm going to go over here.
Can you tell me what's similar about this point right here and this point right here? Go ahead and comment. What is similar about those 2 points? They're the pivots for long-term mean reversion. Okay? When we re-enter an overexpanded band. Okay. Actually, there's...
So, yep. December 16th, we re-entered the overexpanded band. We predict that we revert down to its relative mean. That appears to be the case. Okay? So, I'm bearish. Imagine that. Spicy. Nico asks what I'm nibbling on. This is just raw cinnamon bark. Yeah. Yeah, it's a lot better than gum. And it tastes better than gum. And it's probably better for you too. But instead of actually chewing cinnamon gum, just chew cinnamon bark. It tastes better. If you wanted to put a law ball spot buys beneath the weekly 200, where would you ladder? I would ladder down to the monthly 50 moving average on Bitcoin. Kyra says, hello, can Wave PM and 3D Wave PM be used to get into a trend as it's developing? Yes, that's called trading the expansion, okay? All these mean reversion positions I like to point out, that's trading the compression, right? It's trading the shrinking size of a distribution. Trading the expansion is completely different, right? You actually have to use a shorter term Wave PM reading to actually predict the signals. And there's a lot of looking at volatility overhead. And I do go in depth about this in my new course. And I do recommend buying that. It's going to be up shortly. Or at least the first episode's up now. I think I might have time to do the next episode tonight. I still feel like shit though. So I might wait till tomorrow, if I'm being honest. Also, I know it's really fun, guys. Every time you re-enter this blue band, price reverts to the pink mean. Just every time. Like on the nose. You enter here, short, down to this location. Boom. And all these short ones too. They're really nice. Mean reversion, mean reversion, mean reversion. It never fails. Right? Mean reversion. And it's at really clean pivots, right? So from here to here, that's a trade. And then from here to here, that's a trade. And they both stop perfectly at those pivots. It's just ridiculous. Here's another one. That's nice. There to there. And then look how clean this is. It actually defines the upward trend based on that pivot. It's absolutely ridiculous, guys. You can get these indicators too. It should be up later tonight. Here's another one. Enters here, reverts to here, bounces up, touches the top edge of the band, bounces down. Beautiful. Really clean, guys. Oh my goodness. Look at this one. It enters here, and it immediately just goes up and touches the pink line. Here's another one. Oh my god, guys. We could have predicted that the downtrend on this would begin before it started. This is really clean. Like, this bull flag that was happening here, we knew it would fail. Actually, this bullish pennant, excuse me, ascending triangle. I guarantee you, we had this structure getting drawn everywhere on TradingView. And it was actually on this downward leg we knew that it would actually start running down, and that's before the pennant even broke. You know what? They're not wrong, because this is a downward break from, Jesus, an ascending triangle. Except they don't know why, right? It's just a triangle to them. But here, boop, pivots down to the mean. Actually, I'm kind of curious what the actual longest overexpanded period in that was. Let's go to the 4 hour. It'll take a second to load. Hold on. Whew. Nice. Okay, a few more comments. Yeah, Dominic, previously the mass was a lot more overexpanded on the previous crash pattern for the NASDAQ. So I actually don't expect that deep of a retracement this time. I'm going to check out USD Japanese yen, and then I'm going to be done because I don't feel well. Yeah, no, this is still a line for decay. I'm not going to touch this. Sorry, guys. No, nothing yet. Alrighty, folks. That's it for me today. Like and subscribe. I'll talk to you all later. Have a good one.